right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar, so I want to welcome you all back. I'm still laughing. I'm still laughing about the monkey patterns. Okay, we got. Okay, all right. So we got to get started. There's the peso. By the way, this peso is probably done here. We've had this. Just so you guys know, I mean, we've had this channel drawn up here for a while, so I don't think anything's really changed, right? Correct me if I'm wrong, and I don't know what extensions we're at, but I'm assuming we're getting pretty close here. Man, things on a freaking tear though, isn't it? I mean, who knows where it's going to stop? I mean, this thing could stop in the 90s, but I would say that this is pretty correct. That I don't know where all that stuff came from. That's all right. We drew that a couple days ago, but that looks about right. So, yeah, just you know, you look at the peso and go, wow, that's crazy. But anyway, all right. Enough about that. I don't even need to focus on that because I'm not trading it. I don't trade it. So, all right, let's go to the euro dollar. So here we are with the euro. Now, the threat for the euro dollar is that we break higher. Because of yesterday, it looks possible. And now I want to bring your attention to this. All right, so we have been looking at, and let's go over to the 4-hour chart. This, I think, is going to be the best view. Okay, so this move here, 127% extension, 618, right? That stalled us thus far, and it was a key rejection, obviously because of the Fed minutes. The market has interpreted that as, you know, oh, that's pretty dovish. Fed's not going to raise rates in September. We're moving the goalposts back, you know, yada yada yada. Great. 113 now seems doable. Okay, 113 is a huge confluence, and this is depending on where the dollar index is at. I'm probably looking to sell the euro somewhere in this neighborhood, somewhere between 113 and probably 114, somewhere in here. Again, it depends how far the dollar index goes and kind of what all the other cross rates are looking like. But that's ultimately what I'm looking for in the euro dollar. Now, also keeping in mind that, you know, I like symmetry in the market. So when you're, you know, when you're dealing with, you know, you know, patterns, this might be what we end up doing is like a symmetrical triangle. So you know, I still think it's consolidation. Like you go to the euro, or excuse me, to the dollar index. You know, you go to the dollar index, zoom back out like that. We have symmetry here. That's why I believe that we're still building this pennant, which will take the euro, you know, up towards 113. And it may be even a little bit further, just because the euro dollar, although a really big component and you know, the majority of the dollar index, it isn't the entire dollar index. So the euro dollar could actually exceed that a little bit. Because the euro is actually outperforming on some of the crosses. I mean, if you look at the euro pound, look at the euro Aussie, euro Swiss, you know, all these euro crosses still look pretty solid. So with that being said, we could surpass that 113, maybe even a little further. But again, that's what I'm currently looking at now. So keeping all that in mind, where is critical resistance for the euro today? You know, Paul said, you know, 111.89, which would be a spike high here. I just think this 112 area is going to offer really good resistance. I'm going to say 112, and it's an approximation because you can have an overshoot like you had the other day where it goes to 112.15. You know, the 618. Don't forget, this is a really critical 618. Daily retracement that comes in at 111.90 something. So all of this 112 area is going to be, you know, it's a zone, you know. So 112. So just because we take out 112 doesn't mean, oh my God, it's broken out. It's just, it's key resistance. You got to be really on guard when or if we approach that resistance. Okay, so 112 key resistance in the euro. We are still in a range environment. Now, I know a lot of you go, well, didn't yesterday's news turn us bullish? Well, maybe, but I still think maybe near-term bullish, but I still think we're in a larger term, longer-term range. I mean, if you look at the daily chart, we're really not going anywhere, are we? So we're still in a range type of environment. And keep in mind, there's people like me that still want to buy the dollar. I want to be along the dollar ahead of a rate hike. So, I would like to buy the dollar here. So not necessarily here. So that still keeps us in a range environment. We really have to bust out of the dollar index. The euro really has to start taking out some of this resistance for me to really change my tune from being a neutral environment into a bullish type of environment. All right, now, key is where support, because I think you're going to find some support today on dips. The question is, how far can the euro dip? So let's imagine you're short the euro right now. And you're going, excuse me. Sorry, didn't mean to yawn. Yesterday was my son's 11th birthday, and so kind of out a little late and celebratory stuff. Anyway, trying to put myself in the shoes of somebody who's short. Okay, if I'm short the euro dollar, I'm kind of thinking, all right, well, where can I get out of this? Where can I get out of this pair? If we get a dip, at what point am I going to say, all right, I'll just get out here? Because I don't know where the high is. We don't. If I had a definitive like, oh, that's resistance, so I can draw a fib, I can kind of figure this out, but we can't because I don't know if we're still hitting new highs, or if we're going to continue to hit new highs. I don't know. All right. So in regards to the euro dollar, I'm assuming any dip down towards 111 is going to be very well supported. Where is that? Okay, that's where that line came from. So any dip down to 111 is going to be very well supported. Matter of fact, if we can break 111.10, it might be enough just to stop out. Anybody who's long, like late longs, people got in long here, stop them out, then bounce. If we in peaked here, it's probably about a 50% retracement. So that seems very logical to me. So any dip towards 111 is probably going to be very well supported. I would think that we probably don't even get down there. I don't even know if we're going to get down there today. It may be, 1150. I mean, we'll see if 1150 will hold, but maybe even there. I mean, there's a lot of support on the way down, so you just gotta, maybe 1130 and 111. I mean, would be two like viable support levels. So 1.1130 ish. That would be support on the way back down. Depends how aggressive. We also have U.S. economic data today. We got weekly unemployment claims. You've got existing home sales, I believe. You got existing home sales. You've got Philly Fed. All right, so all of those numbers can move the needle. I mean, it could push us to 112. It could push us down to 111. So I don't think you can. We could have a string of really strong data come through today and push the euro all the way back down to 111. That's not out of the question, in my opinion. So anyway, right. So there's the euro. Let's go over to the cable. The pound, now the pound's recovered really well off of 156, and I'm going to show you this trend line support. So the reason why the cable got a bounce is twofold, because I kind of got up and I was a little weary-eyed when I got up, and a couple of the guys in the chat room, like Greg and Rick, they got long the pound, and I'm like, but the retail sales was, pretty poor. We bounced off of 156, and then I started to read into it, and I was like, oh, the energy component of retail sales is the reason why I was, such a weak number. So it bounced. Because I was half asleep. I didn't really realize that until after we were already back up into the 40s or 30s, and I'm going, oh, that's why the cable's bouncing. So anyway, the retail sales numbers came in worse than expected, but it was mostly attributed to energy. So with that being said, we got the pound bouncing. Okay, and it's bouncing back and retracing. Now we got to figure out how far this retracement is going to go, because the pound looks, in my opinion, it looks like it's damaged goods. But just because now we're starting to make lower highs, we're still really struggling with this 157 level. But we did have a nice reaction off of 156, so that tells us how important 156 is. So I'm going to write that down. If we break 156, that is going to be very problematic for the bulls. All right, so right now we're still in a range. Okay, now the question is, how high are we going to bounce here, because we're still getting a pretty decent bounce. I'm assuming the 786 retracement is coming up real soon. We're right at the 618, which I'm not really too interested in trading the dollar at the moment, but for those of you who are, it's probably not a great, or not a bad place to be short the pound. If you want to, again, I'm not really interested in trading the dollar at the moment, so I'm not going to short the pound, but that doesn't seem like too bad of a place to be on the short side. Resistance 156.80 would be the 786. A lot of congestion up here, so I'll just write that down for now. Sorry, 180. We also had the CBI realized sales came in better than expected too. That helped the pound off the lows. Kind of happened just as I was getting up to. I'm like, oh, and that's kind of giving it a little bit of an extra push. Okay, let's go take a look at the Swissy. So the Swissy, I still maintain a long position. However, I did get out of part of my longs. I took some profits off the table yesterday because it was not huge profits from the last couple of weeks, but I took some off the table when we breached through this 97 cent level, because, like I said, I wasn't comfortable with it being up there. So my position's been halved, which now it's a much more manageable position. I'm only down like 20 pips in my cost average now of what I own, and it's fine. I don't mind it. We're actually at a 38% retracement, okay, on the Swissy. So these are levels where you can see it's starting to be supported despite the dollar weakness. You notice the divergence here. You can go and look at it this way. Okay, you'll notice that the euro, let's go to like an intraday chart. You'll notice it's much more prominent. You notice how the euro, wherever it is, there it is, the euro is pushing higher pretty aggressively. The Swissy is now stabilized. Okay, so what that suggests to me is now the Swissy is finding some support down here ahead of this 38% retracement. That tells me that this 96.10 level is pretty key support. 610. Pretty key support. Now, it's going to find sellers now. So people are going to be selling on bounces. So any bounce back towards 97, I would say 97 and a quarter to retest this broken trend line, that's going to find sellers. And then it's obviously previous support too. So, and we've gone from being in a bullish environment to a range environment. 97.25, which is unfortunate. That kind of bums me out. I was hoping for dollar bullishness yesterday because it would have helped my dollar Swiss. I was hoping for a hawkish FOMC rather, because it would have helped my dollar Swiss. But at the same time, it's like, well, if I want to position myself really good for next month, we're going to have to see some dollar weakness. So I guess it's monetarily it wasn't good for me because of that. But I think having the opportunity to buy the euro dollar, or buy the dollar cheaper, or sell the euro up towards 113 is a good opportunity that'll pay in spades, in my opinion, over the course of the next month. Hopefully, as long as my plan comes to fruition. So anyway, dollar Swiss. I'm still upset that I didn't unload everything at 99 cents like I said I was going to a week and a half ago, which is still something I'm very frustrated about. But that's neither here nor there. So there's the dollar Swiss. Now I want to show you the dollar yen. What's really interesting about the dollar yen is that I don't know if you guys noticed this, but equity markets are down pretty aggressively. I mean, you've got futures down, okay, 125 points in the Dow futures. European markets look pretty heavy, and the dollar yen. Remember, we have this expanding web. I when I got up this morning and I saw the dollar yen at 124, I was like, what? I'm like, I was thinking to myself, I'm like, why aren't we at 123? That's exactly what I said this morning to myself. I was just thinking, I'm like, what the hell are we doing up here? You know, so I myself, I have to say, I'm very impressed with how well the dollar yen is holding up at this point. Okay. Now, does that make it attractive to me? No, the dollar yen is so far off my radar right now, and all these other yen pairs, I'm not excited about them at all. Like, there's no interest for me rather, to trade the dollar yen. Now, that doesn't mean it's not going to develop into some wonderful chart pattern soon, but I've had a hard time reading the yen pairs, and it's served me pretty well just to kind of stay away from them the last week and a half. Um, Although I shorted the pound yen maybe about 30 or 40 pips ago last week, and I would actually be up 30 or 40 pips after a week and a half, but that's not saying much. It's very frustrating. The euro yen, I forget where I was short, maybe a little lower than where it's at, and Aussie yen's come down, I guess, but man, these yen pairs are very hard to read at the moment. They really are. So I'm so like not excited about any of the yen. So anyway, with that being said, the 78% retracement and spike low is just sitting below where we're at. I'm assuming we're going to find some support there. There's a 38% retracement that comes in right there on a little bit longer time frame. That all comes in around 123. Let's just call it 123.45 if we get there, and that's an if. 123.45. I'm so bewildered by the dollar yen movement at the moment. I actually went last night. I'm like, is there any Japanese news that I missed? I wasn't even sure. I was like, did I miss like some secret data that came out last night that I wasn't aware of? But anyway, it's just not doing anything. All right, resistance though, I guess. I mean, anywhere up here towards 124.50 is going to offer us some sort of resistance, I guess. Something like that. So 124.40, if we can make it all the way up there. But that doesn't do anything for me either. So 124.40, I'll just write that down. But it's nothing major, and it's just kind of range bound. All right, let's go over the Canadian. So the dollar Canadian, there's a lot of people shorting the dollar Canadian out there. There are. I see them all over the place. People don't believe that crude should be down here. They don't believe the dollar Canadian should be higher. Whatever the argument is right now. The thing is the Canadian's holding up well because crude is near $40. Crude's bouncing, and it seems like every North American session, pit traders come in and they try to buy crude because they want to support prices. People want to support prices. They're going to find the best support here in North American trade. So if you're a Eastern European, trading house, you're like, listen, I'm gonna buy crude oil in the North American session because I know that there's, all the Midwest Texas traders. They're all, they're trying to support crude prices. I'll help them. So it doesn't surprise me when crude tries to stage a bounce in North American session, but what we found is it every time a bounce is made, it's unsustainable. And so, with that being said, you have to be careful being on the short side of the US dollar Canadian. I don't necessarily think it's a great long either. Like, I'm not, I look at the Canadian, it's like, I bought it, I bought it yesterday. I got out and lost 14 pips. And then it ripped, I'm not exaggerating. I like literally bought it. I bought it here, bought a little bit more here, sold it here, lost 14 pips, could have made 40, and then I'm just like, I'm just not trading it too well. I'm just not trading the Canadian well. I'm not getting I think I get the prices that I want, and then it overshoots. So um, as far as like like looking at it, it's like, where do you buy this thing? I mean, I guess you buy it down dips at 130 and a quarter if you can get it, but it's at 130, 130, and unless crude bounces $2 today, I don't know. I don't know if these prices are doable. But there is, excuse me, there is a lot of volatility, obviously. This resistance, why it's so key at the moment, is because it is a 786 retracement. Oh, actually, I thought it was a 786 retracement. I guess it isn't. Shoot. I guess it was an overshoot. All right. Well, skip that. I guess we just have to mark that as really key resistance and supports. I don't know. I mean, because this is a valid price. I mean, as silly as that move was, I mean, that was a valid move. So, I guess we'll find some support down on an approach to 131, right? 131, 131.80, right? 131, 131.80. It's still bullish. It hasn't turned bearish yet. It's still bullish. It's just choppy as all get out. So, if you're going to buy it, try to pick up an extreme move, because those extreme moves seem to be the ones that provide you the best opportunity. Just dips down there, crushes through that support a little bit, stops out some people, get long down there. I mean, it's kind of the way you have to attack the Canadian. It is a crazy ass currency right now. It really is. Okay. Let me, I'm going to put you on break. Raphael had a comment about crude oil, so I'll read that over break, and I got to go get some coffee anyway. So put you on break for a few minutes. We'll wrap up with the Aussie Kiwi. I'll read Raphael's comments. I got a couple other comments I need to read too, and we'll get ready for the weekly unemployment claims and existing home sales. I think it's existing home sales. We'll see if any of this inventory is moving. I'm going to tell you, I'm in a real estate hotbed in Phoenix, and I live in North Scottsdale. So and things are always moving around here. I haven't seen homes move at all. Like, stuff is just sitting now. Kind of scary, actually. I see homes they're just sitting. I think we're at that point where prices are so high, but the buyers don't want to buy yet. They don't want to drop their prices, so everything's just kind of stagnating. I don't know if that's indicative of the entire market, but it's kind of what I'm seeing here. Anyway, it doesn't really matter. I'll be back in a few moments. Don't go anywhere. All right, traders, sorry about that. I had to grab I'll be on the Benzinga pre-market show a little bit later this morning at 9:15. I think 9:15 or 9:20, excuse me. I had to go grab the email and tweet that out and all that stuff, and I forgot to do it early this morning, and so I got reminded by Cal Confidence that to do that, so I did it. So anyway, hopefully I'll see you guys then. All right, going back to what we were discussing. Let's finish up these commodity currencies really quick. So you take the let's start with the Kiwi. So the Kiwi's making a nice little rally here, and which I'm happy about because I'm actually long the Kiwi, not the New Zealand dollar. I'm long the Kiwi on crosses. You know, I'm short the pound New Zealand. I'm I just bought some New Zealand Swiss about 20 pips ago this morning. So I don't mind it when when the Swiss goes up. Now the question is, are we going to be able to break some of this topside resistance? I mean, we've been really consolidating down here, and we haven't uh, 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 broken higher. I think a lot of that has to do with the weakness that we've seen in crude oil. But gold's above 1130 right now, and it's holding up pretty well. So that should support commodity prices. Like the Kiwi. Now, I just really don't think we have a whole lot of upside here. So even if we clear like the 6650, takes us out of our bearish trend. But the question is, how far are we going to go? I mean, do we make a run for like, 67 cents? I mean, I don't know how much upside is underneath here. However, what I will tell you is, to me it does look like we'll at least break and get people excited about the Kiwi. At least if it's not, a turn, at least short term. All right. So 6650 is resistance, and then beyond that, I'll just say it's about 67 cents. So just in case we break it, because I think it looks like we're going to actually run for the top side resistance. Which, like I said, I'm gonna enjoy it. I'm looking forward to it actually. So that doesn't mean I'm going to step in and short it either. I'm just saying that because I'm long the Kiwi on some of the crosses, I'm happy about that. But I think we have to get above. And I move this up because I don't know how the trend line's being drawn. I don't know if we're going through that wick there, or that tip, that wick, or maybe it's going through that tip, both wicks. Maybe it's at the top of that wick, which at this point you got to kind of give it this area that we could just stop out traders, get slapped right back down again as the euro maybe rolls over at 112. Who knows? So somewhere up here is going to be very critical for the Kiwi, and I don't know where it is. All I know is it looks like we're going to probe it. So be ready for it. Now support is 65.50 right now. It was support overnight. We didn't even get down there overnight. I thought we'd at least make a push for 66.50 and bounce, but we haven't. So that's 65.50. Excuse me, 65.50. It's not great support, but it is support. 65.50. Yeah. Okay, let's go over to the Aussie. Aussie, same thing as the Kiwi. Nothing different here. But the Aussie, really, a couple things that developed I thought was critical. First of all, let's get rid of this for a second, and let's get rid of this, and we're going to keep everything. Well, let's get rid of that little red line. Okay, so this trend line right here, okay. Let me move this. Shoot. Let me just do it this way. Okay, I'm going to take that tip there. Okay, so you can kind of see that trend line, although I think has been, violated a couple different times. We're still, we even overnight we kind of respected it. There's a 618 retracement we respected. This is the reason why I bought the Aussie Swiss, by the way, is because we were sitting down here, and it was just a little position. It's not anything I'm going to write home about. But right now, we really are bouncing off this 72. Well, the low here is 80, right? Or 84, 83. So 72.85, which it coincides with the 618, very important support now. So 72 to 85. And I think one of the reasons why it got so beat up overnight is because the futures were down. Okay, but we've bounced from there. Now resistance, this has been a struggle. for the Aussie. You can see it right through here. So it's probably going to continue to be a struggle on any rally. So any rally up towards 73.50, it's probably going to see some selling. Okay, we are still in a bearish trend, but like the Kiwi, they're trying to turn. They're just having a really difficult time doing it. And gold, although gold's above 1130 right now, obviously things can happen, like poop, you know. No, I mean, we could have good US data, dollar rips, gold falls, gold puts in a false, like a reversal candle. Next thing you know, you got these commodity currencies come back under pressure. So it's a little too early, but they are looking constructive. All right, let's go to the dollar index. Okay, so here's the dollar index. All we have to really do is just focus on the support from the other day, which would be right here. The low 95.92 is the low, so 95.90, right? 95.90. And that's going to be kind of key support, because if we can break that in the dollar index, that really then opens up that really opens up the move to the lower end of the triangle. If we can break that, okay, that would put the euro above 112, that type of thing. Resistance, well, would have to be the overnight, well, not overnight, yesterday's highs, right? 97, or yeah, about 97.05 ish. We are very much in a range environment. Okay, now just a heads up. I mean, I know I'm not going to put these on the bias chart, but just a real quick heads up. Don't chase the peso up here. I think that would be a little bit of a mistake. The reason why I say that is that channel that we've been discussing for the last, couple weeks. I mean, we could very easily be probing into the upper end of that channel and then come right back down again. So just be careful chasing it up here. The flip side is it could end up being a runaway freight train. You never know. I mean, these emerging market currencies are just getting demolished right now. So they're at levels where they could really start to accelerate too. So just have to be really careful with them, obviously. Let's go to the US dollar Norwegian krona. Now this was trying to break the highs yesterday, couldn't. I think a lot of that had to obviously do with the dollar weakness that we saw. So we're still very much in this, up against resistance, supports coming into play. It's a daily chart, kind of long wicks on these dailies. So, obviously we can start looking for a turn here if we can break below support at 820. But also key resistance is right up here. Crude oil can make a dip into the 30s, and next thing you know, this Norwegian krona goes straight up. Swedish krona flag pattern. Okay, looks possible. I'm roughly drawing it right now, but we have this flag pattern drawn out. So you go like this. Okay, it's trying to play out, especially if it breaks through support. So keep that one on the radar if the dollar comes under pressure today. And that is pretty much it. Here's your bias chart. Now let me. I'm going to read a couple of these questions. Raphael wrote in. He goes, "Hey Blake, some inside news on the oil front. One of my best friends."